Good morning, everybody. Mike Vacchi, Princetontrader.com, here with your Thursday market webcast. All right, it's 8 a.m. Eastern as I'm doing this, so about a half an hour from now, we've got the CPI report. We talked yesterday about how the CPI has marked highs and lows along the line for the past couple of months. Like, this was CPI, this was CPI, and now, it lifted out of the zone. So it had a rejection back into the zone. The 20-day and the weekly pivot held back on Tuesday. Yesterday was a solid day for the bulls, and now we're up testing that 200-day exponential moving average. Overnight high is 4,001.5, and we'll see what the number at 8:30 brings. We know what it's going to bring. It's going to bring crazy volatility. I mean, you've seen triple-digit true ranges on the tape. You've seen 100 and something handle 1 3-minute candles. And look, I'm a day trader. It's what I do. It's what we do. It's what we do, on a very high level. I'm not trading that 8:30 candle. Fuck is wrong with you? Why the hell would you do that? I mean, you want to blow up by 8:32 if you're wrong? I mean, that thing will just take your account right out. So what are we going to do? Well, we're long from 56.75. For the third night in a row, we've ridden one. 40 handle runners on the other two. This one's rolled up to 30. It looks like it'll be 40 or better, but I'm dismounting that trade before 8:30. I'm going into this number flat. Just like we go flat into the FOMC, we go flat into jobs. I want to see the reaction. The reaction on CPI is going to be insane. It's going to be insane. You're going to have to probably, however this thing turns out, you're going to have to go, we've seen in the past, you've had to go 30, 40, 50 handles into the hole before a trade would even come back your way. Meaning, say you shorted it before the number at 4,000. It would go to 40, 50 before it went down to, anywhere a place where you're going to get paid. That's not risk. That's unaliving yourself. That is the day trader definition of suicide. Why? So you can be right. There will be plenty of handles and plenty of time to make those handles once this thing figures itself out. But right now, it is lunacy. Absolute lunacy. So be careful. Just be careful. Let this thing happen. We're going to let it open up. We're going to figure out what the reaction range is. We're going to find where the key price is, define the risk from there, and go from there. But we are not taking any anticipatory CPI trades, and we are getting out of what we are in. So we'll see if it wants to create a high. We'll see if the bears, run the rest of the day. What's going to be interesting is, and maybe it's not today, maybe it's some other CPI, when the pattern kind of reverses itself, meaning CPI becomes a springboard or a cliff whereby the rest of the day heads, in the same direction as the reaction. So, if that was to the upside today, you'd see a spike high, you'd see it come in, create a higher low, and then break out above the spike high and go. That would chase a lot of bears out of the pool. You take this one back in October, for example. You had the spike low that they lifted. If the bears could have held that and knocked out that low, oh man, see ya. You'd have had another, 100, maybe 200 handles to the downside that day. So eventually that's going to happen. Not saying it's going to happen today. I'm not planning for any of that. It's kind of like I told you yesterday. Are they going to run this up into a high into CPI? Yeah, maybe. What am I doing right now to get ready for that? Nothing. What did we see yesterday? We saw yesterday that 56 to 58 was a pretty key area, and they had a difficult time holding it as resistance. It turned into support, so we got in there, and then we just took some profits and let the runner do its thing, and that was almost 50 handles ago, and that's not a lot of trading. Our mantra for the last couple of years has been trade less, make more. We used to do a lot of trades early on when I was doing this 6, 7, 8, 9 years ago. We take a lot of trades. We don't take a lot of trades now. We average probably about 6, 7 setups a day, 8, 9 trades a day, depending on how choppy things want to be. But when something starts to work, we just let it work. So hourly chart, it's more of the same. So all these multiple areas got tested on Tuesday. They all freaking held. Weekly pivot, 100-day, 20-day. So if you're looking at why are we here? We're here because they screwed up here. That's why. Okay? And then they built some, then they took out that rejection high. They built a higher high, and we got a higher high after that. So we'll see what the reaction is into the number. What's happening now really doesn't matter as far as longer term, like technicals, where the CPI thing's got to get spit out onto the chart, and then it's got to make a decision about what it wants to do, and then we'll go from there. You got volume weighted average price down at 91, proprietary moving average 91.5, hourly midband 88.5. Your overnight low is sitting around call it 85. Pretty tight Globex range, only been 17.5 handles Globex. The bears really have got to keep things below 4,000, whatever happens today, on a closing basis, and then start to work things back in towards the monthly pivot and work things back into where they were on Tuesday if they can. What do the bulls want to do? They want to keep going. There's room to the upside if they want to break it out. That's the byproduct of trading in a big box for a while. It's not exactly compression and expansion, but it kind of works that way. And we talked about that back when we were drawing the box. Win this zone, and you're going to win the next leg of the market. Now, let me stop you there. CPI is going to have everything to say about that. Bulls aren't winning a damn thing if it goes down on CPI. It doesn't matter. They've had a solid little 2-3 day run, but their little 2-day run will end at 8:30. But if CPI goes in their favor, not just on the reaction but on the move, then yeah, it can head back up, and you start looking at areas like you start looking, maybe not this 4180 seems a bit much, but it'll be interested to see if they can get the upper band involved. Up at 4012, 4015, and where they can close. If you're the bulls and you get the advantage off of a CPI move, you've got to close above the 200. That's the purple line, and you got to close something with a 4 on it. Not a 3. You're done with the 3s. Something with a 4 on it. Bears, you want to get back to the 3s. You want 4,000 to start looking like a solid ceiling to things. All right, that's all I got. Have a fantastic day. Be safe, be healthy, take care, trade them well. Please don't do anything utterly stupid at 8:30. And I'll see you. I'm going to try to get a webcast out tomorrow. I am traveling, so no promises there. Everybody have a good 3-day weekend. Worst case scenario, I will see you Tuesday morning. Take care.